one of the legacy problems with, I would say, crypto and blockchain in general is this. There's number one, a lot of anonymity around it. There are tokens or cryptocurrencies that are untraceable, but and which has led to a lot of nefarious uses, which has caused problems, money laundering, terrorist financing, which are plenty of global mandates around, as well as illicit purposes, uses of funds. So when I say illicit, drugs, child trafficking, human trafficking, etc. So without getting into all of that, but basically, the very nature of it allows for those types of activities. What we've done is basically built a private permission blockchain. And if you look, it's been very interesting, is now very highly promoted public and private permission chains because there's very significant utility in these technologies. We have tied identity to compliance. So basically saying with a minimal set of verifiable credentials, we can create an identity. We can apply in our nomenclature badge that identity. And with that badge, be compliant with both global and jurisdictional compliance and regulatory standards.
Hey everyone, and welcome to episode 5 of Yaka Talks. Today we're here with Kirk Chapman, co-founder and CEO of the Universal Ledger. They just came out of stealth not long ago, having raised $10 million, not too shabby. They also happen to be a core piece of the hard Yaka ecosystem. We're going to get to know Kirk a little bit, as well as his company, plus his perspective on how ledger tech and payments are evolving around the world. Not just the technology and product, but also the regulatory landscape. Because here's the thing, when you're solving a problem as big and fundamental as something like money and payments, that can have a colossal economic impact on individuals, on small businesses, or big international ones, governments. But enough from me. Kirk, how's it going?
Well, Alec, thank you for having me.
It's a pleasure. Yeah, I've been looking forward to this one. Why don't we start with a quick intro? Who's this Chapman guy? What's his story?
Yeah. So obviously, I am now the CEO of Universal Ledger. My background is really banking and fintech my entire career. I started off the first few years of my career. I started a company in the Southeast. We were a managed service provider for banks. Spent about a decade in that space, really delving into banking, bank ops, all legacy tech, I would say. Kind of the forefront, though, of just moving from on-prem servers to cloud providers. So Fiserv, FIS, and Jack Henry moving to remote services. Went through the crisis in 2008. Kind of shutting down some of the banks that we had stood up, work with the Fed, which was pretty interesting. Again, not just learning about the tech, but also just how lending works, how money moves, how payments work. Very involved in the Friday afternoon calls when the black vehicles would show up to a bank on Friday and reopen on Monday with a different name out front. Got through that. One of the banks we had was under a consent in South Carolina. Some private equity players came in. They bought it. They wanted to have kind of a very early on play to what a lot of people have done recently, but bought the bank for the bank charter. They wanted to build a white label payments platform on it. We built that, introduced the first U.S. Installation of the Temenos T24 platform, which was what M-Pesa used when they kind of really changed the way Africa moved value. After that, I spent a couple of years in that space, stood that up, actually worked early on with some of the very early cash players, Square Cash being one of them. From there, we changed gears, basically built out a lending platform with a bank, went through a couple of phases with that, just stepped away for a moment and then stepped back in working for SoFi, ran all their operational tech, everything from all their enterprise infrastructure down to desktop support, helped them get their bank charter from a tech standpoint. Made an acquisition of a company called Galileo, which is a great payments provider. They actually power about 85% of the challenger banks in the U.S. space. I became head of strategy for Galileo. In the middle of all that, I was advisor to the CEO for Anthony Noto, which was also a great place to learn not just about fintech, but about running a business and leadership. So very grateful for that until about 1 year ago, in which Greg and I had a talk, a rehash of a talk we had 3 years earlier, and I decided to join him on this venture called Universal Ledger.
The infamous Greg talks. Um, yeah, so obviously steeped in banking, payments experience, operations, lending, also building out these platforms. I mean, you were sort of like rebuilding banks over the weekend during the crisis, I guess. At at what point does something like blockchain and like distributed ledger tech sort of come onto your radar?
Yeah, I think it's a great question. I mean, I would say my career has always been kind of on the front end of banking for sure. Like I said, we did the first real production installation of the Temenos T24 with a company out of Alabama. So, which was a very new banking core, very modern, all API driven. At SoFi, of course, they were on the challenger bank side. They had a banking core that we had to actually kind of extract a lot of the key components. I didn't mention this. We acquired a banking core called Technisys out of South America. Again, very leading competitor to Mambu and some of the other players who are in the space. But really, I would say blockchain kind of came on the scene really when I was at SoFi. Part of my role as advisor to Anthony Noto was to look at emerging technologies, how they fit. Is there opportunities for SoFi to integrate with them? Are there revenue opportunities? All of that. And I would say kind of understanding what blockchain is, the movement of money, what crypto is, can that apply to kind of legacy problems in the banking space or in the payment space more specifically? And the answer is clearly yes. And I would say, and we can talk about this, but there are different components that apply, and some components that just they don't apply. You know what I mean? Or maybe they're not as useful as others.
Right, right. That makes sense, right? In your position, being sort of at the forefront of a lot of this technological innovation, thinking about how you can incorporate it, into your platforms. Uh, I guess blockchain sort of, requires some exploration at the very least. Maybe not as a solution, but potentially as a tool for addressing some of the challenges that we have today. Um, you just raised a boatload of money at a time when fundraising is down. You've got a working product. You're licensed and regulated. You're chatting with potential customers around the world, companies, government officials, policymakers. You've got your first integration coming up. The universal ledger kind of is already a big deal. What's that all about?
I guess taking it one at a time. We did raise a fair amount of money at a time where fundraising is difficult. It's particularly difficult in our space. As you know, we closed last round in March, which is post FTX, post some of the news around Binance early on. Definitely some of the other exchanges and custodians. I would say all of that speaks to the validity of our product and what we're trying to accomplish. So I would just start with that. We are talking to different government officials and different banks across the world. And I would say our solution is very unique. As you mentioned, in the Bahamas, we are regulated under the DARE Act. We spent the last year in stealth building the foundational components of Universal Ledger. One of those was becoming licensed and regulated. We feel that plays to our strengths of being a compliance and identity first based digital wallet platform. But yeah, I mean, I would say, the market is telling us, or I would say affirming kind of what we set out to do a year ago, and everything from the conversations that we're having to even more recently, the BIS Bank of International Settlement paper that came out. The market signals are definitely in our favor, from everything from the funds we're able to raise, the conversations we're able to have, and then other non-related news that's coming out that supports what we're trying to accomplish.
That's awesome. And let's dig in a little bit to what you're trying to accomplish, right? Right. Let's talk about what you've been building for the last year. You mentioned this identity compliance first wallet sort of platform. Like, what exactly is that all about?
Yeah, sure. So one of the legacy problems with, I would say, crypto and blockchain in general is this: there's number one, a lot of anonymity around it. There are tokens or cryptocurrencies that are untraceable, but which has led to a lot of nefarious uses, which has caused problems: money laundering, terrorist financing, which are plenty of global mandates around, as well as illicit purposes, uses of funds. So when I say illicit, drugs, child trafficking, human trafficking, etc. So without getting into all of that, but basically, the very nature of it allows for those types of activities. What we've done is basically built a private permission blockchain And if you look, it's been very interesting, is now very highly promoted public and private permission chains, because there's very significant utility in these technologies. We have tied identity to compliance. So basically saying with a minimal set of verifiable credentials, we can create an identity. We can apply in our nomenclature badge to that identity, and with that badge, be compliant with both global and jurisdictional compliance and regulatory standards. And so we have tied that directly into the blockchain itself, which allows any developer or government that wants to build an app, bank that wants to build an app, to be able to allow really the innovators take over the space, much like when Apple came with the iPhone, they didn't create apps. They allowed the innovators to come up with the ideas and innovate there. But we're creating the foundation that allows banks, countries, jurisdictions, innovators to build digital wallet experiences and use cases, and apply that technology to use cases while making sure that they're compliant in the respective jurisdictions and not facilitating kind of global requirements and compliance standards they're there for the betterment of the world. Just to be clear, they're not there for purely restrictive purposes.
Okay, so from what it sounds like, you're not a crypto company, and you're not really a wallet provider either, right? You're building this platform to allow, developers, businesses, governments, to leverage the benefits of blockchain. But really, for one of the first times, now they have digital identity baked in. They have compliance baked into the ledger itself. It's sort of the best of both worlds. How are you've been talking to customers, to businesses, like how are people thinking about how they might use a platform like this?
Yeah. So you're right. We're not crypto. We provide a digital token. Absolutely. Can we mint, burn, manage digital tokens? Absolutely can. We're not exchange. We're non-custodial. So one of the key things is that our platform does not allow us to be a custodian. So avoiding those pitfalls where, from an operational standpoint, you're tempted to use funds for other purposes than our customers. We don't hold their private keys. So we're able to provide a digital wallet platform that can hold digital tokens or tokenized assets in a non-custodial way. But it's up to the developer to provide the user experience or the use case to utilize it. And so built on that, the conversations we're having, there's a number of ways to use this. In the Middle East and in Asia, there are mandates by certain countries where they want to have unicorns, fintech unicorns coming out of those countries. In those, one of them, without being specific, it takes 2 years from inception for a fintech to be able to go through all the compliance standards and be able to actually go to market with an app. And you can imagine a 2-year burn rate on a startup before they can even go generate revenues. So the graveyard's pretty full of fintechs trying to get to market, and at the same time, they're mandating, saying, "Hey, we want a unicorn coming out of this country in the next 4 or 5 years." So there's one use case. It's purely just helping digital labs, blockchain labs in certain jurisdictions. Another one is along the same lines. There's certainly in the Middle East countries that have mandates to be cashless. So facilitating a cashless society by 2030, for example, in the UAE. In that scenario, how are you going to facilitate a cashless society unless you have identity and compliance all built into a platform to be able to move digital assets around? Those are huge remittance corridors. And in the UAE specifically, you've got 10 million people, and I think 8 or 9 million of those are migrant workers that are sending money back home or back to their home countries. So those are two very, very obvious use cases. In the Far East, complete modernization of payments, where people are looking to modernize payments. And you have to understand these legacy systems, as painful as they are, they have the right controls built in. So how do you go from a legacy platform, not go all the way to complete anonymity and just move money around, but actually be able to control those and see where the money is going and programmatically control a tokenized asset. One of the kind of global mandates, I would say, and we can talk about this in context, but is really even just around financial inclusion, And so when we talk about, just the ability to give people access to finances to everybody that has a mobile phone, and I don't want to be, this is a very tired kind of underbanked, unbanked, tired argument, but I mean, I've been in this space a long time, but I definitely think being able to promote financial inclusion on a level of compliance. What I mean by that is giving people financial inclusion, not in a way that, hey, I'm including the financial ecosystem through an exchange that sends money to a guy that's sitting in a bodega somewhere in in Pakistan or in Thailand or in, you know, some country where you're not really sure where what hands the money has transpired through, but actually being able to provide visibility into those transactions and providing financial inclusion, which is very different than just saying, "Hey, I have access to get my hands on money."
Right, right. And to your point, right? These are legacy systems. A lot of the technologies are antiquated. But also to your point, there's a reason for that, and there's a reason why these systems work the way they do. But now we do have this uh opportunity to digitize, to tokenize, to make programmable digital assets, which now is this $1 trillion plus market and growing. Stable coins are all the rage. There's talk of Tether potentially being more profitable than BlackRock. And we see all these different wallet offerings out there already, and we know that these innovations offer real value, right? Just in terms of access, to your point about financial inclusion, speed, cost, the fact that they're digitally native. It's why we have all these governments experimenting with central bank digital currencies. Like they know this is coming, right?
Yep,
But then on the flip
they do.
side, it's sort of also raises all these additional questions, questions of compliance, of privacy. How does AML work in this sort of blockchain world? Politicians are drafting or have already passed legislation on this front, but as is typical, EU is a little ahead of the US. But we've got Jerome Powell. He's talking about stable coins and how they should be under the Fed's purview. Then you've got these places like the UAE, Singapore, and now sort of Hong Kong rising that really want to create this sort of regulated environment that fosters innovation. You're having conversations with people that matter. What are you seeing out there, and where do you see things going?
Yeah. So to your point, we're in conversations, UAE, in Hong Kong, in Africa. Um, it's been very interesting to me in these conversations to see the difference between what's going on at a global scale versus what's going on in a somewhat isolated U.S. environment. And so I would say the biggest thing that I have seen is, and it's been somewhat concerning to me, is that I do see the U.S. very much infighting around, who owns what. Is it a security? Is it not a security? Do we ban all crypto? How do we look at it? And it's very much, at least certainly globally, comes across as an internal power struggle, and not helpful for promoting what's really a new way of moving money. And conversely, when I look at the Middle East and Asia specifically, we have regulators that are collaborating. They're getting together to say, hey, we know this technology is coming, it's moving forward. How do we have a common set of jurisdictional regulatory principles so that when we're moving money back and forth between countries, we have a common framework, and really not just accepting what is, but promoting it. And your point, Alec, there's a lot of legacy tech, and legacy tech works. You know what I mean? You know, not to use a movie example, but if you watch Sisu, which I don't know if I'd recommend it, but the guy walks around for a week with a bag full of gold, and like that works. I mean, you could, 100 years ago, bringing your horse into town with a bag full of gold works, but there's a reason why we switched to dollars, because it's lighter and it's easier to move, and you don't have to dig around for it. And so now we move to this other digital asset, and now we're moving into a whole new framework around digital payments. And so it's not so much of whether or not it's coming, it's whether or not you're going to accept it, or whether you're going to be essentially, wheeling your wheelbarrow full of gold into town, or whether you're going to actually use, dollars. And so it'll be interesting to see how it plays out. It's been a little discouraging, actually, to kind of see the U.S. not take a lead in something that's going to happen.
I think your disappointment in the U.S. is sort of valid, and there's a place where we're still writing tons of paper checks. But also as someone who lives here, I kind of get it, right? My day to day, I've got Apple Pay, I've got Venmo, you know, stuff more or less works, and I'm okay. Um, where do you see these kinds of technologies having the most impact today or in the short term, right? Because maybe for your typical person in America, maybe they have a lot of these sort of benefits baked into their system. But where are we sort of looking to have the most impact? And you also mentioned this BIS paper. What kind of impact are we talking about?
Yeah, I think the most impact, just your point is well made, and I think U.S., while being a global leader economically, we represent a very small percentage of the population, of the global population. And so, 80% of the world lives in Asia and Africa, and I would say complementing that, or in addition to that, there's a lot of micropayments where for us, we don't mind. We're used to 3% interchange. If we're selling something, that going to a card processor, 3% in a emerging economy is significant. And so, and if you take the major payment corridors, like I mentioned earlier, the Middle East going back to Asia, there's countries in the Middle East on a FATF gray list. So I think these types of technologies that can provide, and I know I keep saying something which is very, I would say, is sometimes difficult to even hear myself say, but being able to provide programmatic money where you can control and see kind of the lineage of the money itself, of the token and where it's headed, is very powerful for these countries, not from a big brother standpoint, but just from a transparency standpoint, and allowing those countries to interact with the rest of the global economy without other countries using that as leverage to say, okay, you're promoting terrorist financing, you're promoting illicit transactions, you're promoting weapons proliferation or money laundering. Those countries don't want that. They want to participate freely in the global economy. So I think, from a government scale, certainly their ability to use this technology to do that. And then from a consumer standpoint, which is always where it really matters, is the ability to move money faster, cheaper, lose less value, the value destruction that takes place in those countries with exchanges up to 12, 15% moving money back to their family. It's significant. And so being able to facilitate that in a way that they trust it, so they know that the money is going home, it's going home inexpensively, and they can control how that money is being spent. I think, to answer your question, those areas will be first movers on it.
Yeah, I mean, it all makes sort of intuitive sense, right? If people are able to do the things that they need to do to transact at, with better access, with better speed, with better cost, it's a win-win for everyone.
It is, and to your point, part of it is mandated. I mean, there's a reason we still use checks here. It's because Safeway still accepts checks. In other areas of the world, it's other countries that are maybe smaller, both in number and geographically. The government can say, "Hey, look, we know there's value destruction in money. We have banks that have costs of liquidity sitting in ATMs, of drivers moving money around, of that being turned to cash being used for illicit purposes. So we're actually going to move in a direction, and society has to conform to that. And there's, it can be very appropriate."
Well, now we have Universal Ledger sort of forging the path ahead. What do we have to look forward to, in the next 6-12 months?
Yeah, I think as I said, number one, we're having a lot of conversations. They're not small conversations. So, I think Universal Ledger is uniquely positioned to solve these problems. And I say that somewhat conservatively. I've been in the space a long time, so I'm probably more bearish on myself than anyone. But I think there's real opportunity here. As I mentioned, the Bank of International Settlement just came out with a paper. It's great. They refer to something called the unified ledger, ironically, which I found somewhat amusing because we've been working on this for a year, as the universal ledger. And it talks about how all this works. And I would say it's exactly what we've been building for the last year. So obviously it doesn't matter if no one knows about universal ledger, but I would say we've been working towards exactly what they're talking about. And so there's plenty of opportunity for us. That paper doesn't talk about how it's solved, what technology is used. It just says this is the framework that could work to solve real problems. I think from our standpoint, just on that note, look, I've been in startups before. We've brought in some very senior folks for Universal Ledger that not only know technology but know business. And I think, you can't. It's one thing to ride a wave or try to catch a wave when it's going. It's one thing to be right ahead of the wave so you can catch it when it gets to you. And I think, as I mentioned, we spent the last year in stealth building something that we saw where the world was headed globally and technologically with blockchain. And I think we're poised to capitalize on it. I think I'm most excited about the human component, which I think can be somewhat misleading. But I think being able to the financial inclusion play, through existing partners is actually pretty real. And so I'm excited to see how that plays out as well. But um, yeah, I'm very excited to kind of see the world continue to head in this direction, for us to be a part of it, and be a part of the conversations, and be in the middle of it, and provide solutions for it.
Totally. Yeah, the thing they always say about like money, finance, payments, it's the most regulated industry on the planet, right? And for good reason. Um, I feel a lot of blockchain sort of early chapters has been about, sort of move fast and break things, like how do we make this thing and just get it out there. But yeah, it's exciting to sort of see the evolution now, and to have, a company like Universal Ledger try to thread that needle at the intersection of compliance and innovation. And I think, to your point, it's with that sort of approach that you will be able to have that human impact, right? Because, to your point, we've been talking about financial inclusion and all these things for ages. But it feels like we're actually getting there now.
I couldn't agree with you more, and your sentiment um, around move fast, break things with payments doesn't help anyone, man. It doesn't help anyone when your debit card doesn't work because you move so fast. It doesn't help anybody when you don't have access to your funds. And so, being methodical and disciplined in our approach, so that not only are we solving problems, but we're building a sustainable company, I think is key. And the guys that are part of this, of embarking on this mission with UL, we've seen a lot, we know a lot, and you're right. I think it's exciting to be a part of something that really solves real problems.
I love it. And yeah, really looking forward to seeing what's next with you and your team. Thanks a lot, Kirk.
Thanks,
We
Alex.
appreciate
Yeah,
your
thank you.
time. It was a pleasure. All right.
Thank you. Thanks so much.
We'll see you all on the next one. Bye bye.